Okay, good morning, everyone. Let's get right into the stock market technical analysis. We'll go through the broad markets. A couple things I want to point out in regards to interest rates and also the VIX spiking this morning. A subscriber just pointed that out, and for sure it definitely is. So let's point that out. We'll look at these FANG stocks and we'll wrap up. Quick note, guys, I am out midway, about half day today. I'm leaving around 11. And then I'll be in and out tomorrow. I'm not going to really be able to put out a video, and I might be able to do some posts for the private member group, but no videos tomorrow. So, and I'll be back on Monday. All right, so triple Qs, couple things. Really, I mean, triple Qs. You know, we've been in an uptrend. Former resistance, kind of these two reaction points right here at 373, or it's about 372, and we're still below that. So you can see here that was resistance there, and then we hit it again, and we've been rejected again. So until we break out above that, that's resistance, and it should continue to put some downside pressure on the tech sector. If you look at the RSI and the PPO, the RSI did burn through the divergence just slightly. If I zoom in, let me go ahead and zoom in on the RSI on the daily chart. You can see it right there. All right, we did burn through that divergence, making a new higher high in the RSI, but PPO still remains divergent. All right, you still have negative divergence on that one. All right, that is still intact. So you don't have to have divergence on both. It's just the fact that we have divergence on one of the momentum indicators still gives us an indication that we're likely going to see a trend reversal. But again, we have to see it. And what's going to trigger that trend reversal? It's going to be probably a break in Apple and Meta. So we'll get to that. Mostly Apple, but we'll look at those charts. So on triple Qs, though, you can see we're gapping down. Kind of just, I don't expect us to do much really this week. I don't think we're probably going to sell off too much this week, but it's always possible. If I narrow down to the hourly chart, short term on the hourly, there is this minor uptrend line right here. I've got a couple reactions through here, one reaction there, and there could be another reaction right there. And then the longer term is this blue trend line. That's your yearly trend. All right, that's triple Qs has been rising on this trend all year. So that's your yearly trend. I would anticipate that we're going to at least hit that trend line and ultimately break, but until we see the breakdown, we can't confirm that. So at the most I'd be looking for is probably a move down to that trend line, and then from there you're probably going to get a bounce. All right, you'll probably get a bounce, and then I think you break, but I do believe you get a bounce down at that trend line. Now moving over to these FANG stocks, Apple. So this is the key one right here, where this has been in a bearish rising wedge, really forming that wedge all year. We're pretty much at the apex, and I talked about how, yeah, we can trade within this wedge a little bit more, but ultimately it should break to the downside. Now, they popped it to the upside. That, to me, looks like a stop clearing move. Okay, you pop it to the upside. Any shorts that are still there, or any shorts that have started to anticipate the breakdown, they stop out, and then ultimately you can see from there it's broken back down to the bottom of the wedge. I'd be looking for that breakdown now at this point of that support line. Now, until we have that, we do not have a sell signal. So ultimately, yeah, we could rally here and stay within the wedge and could continue to kind of grind. We're getting close, maybe another week or so if it's not going to break soon. But it ultimately should start to resolve to the downside. But no breakdown yet. And same deal with Apple. It's the triple Qs is so heavily weighted by Apple. A lot of the time they'll be almost the same chart. You have negative divergence on the PPO, but then the RSI did burn through that divergence. So very similar to the triple Q. Meta. So Meta is, it broke the wedge. There's got this bearish rising wedge here. And if I zoom in, you did break down, all right? That's a close below, and ultimately this for sure is a close below the wedge right there. So you had a sell signal. Now these, to me, the days following look like back tests, where you back test, and then ultimately, even yesterday, that ramp up was still pretty much a back test of that trend line from below. And today, I do think I do think it doesn't have to sell off today, but I think we're, basically trading into resistance, and we're going to get rejected up here and start to head lower. So still looks like a breakdown and a back test from a big wedge. You've also got, this one's got big divergence. It's really been diverging for a while. Let me move that back. Just continued divergence on the PPO and the RSI. So we'll continue to watch that. This one will really get going when you start seeing Apple and stuff break. And some of these other things, I mean, they're kind of just drifting sideways. You can see here, I mean, Amazon, we're basically in this little sideways range for over a month now. So again, that's why the videos, I haven't been putting out a daily video, because there hasn't been a whole lot of change. We're in the summer holiday time frame, the low volume, it's summer trading. So okay, let's get to the interest rates. TNX, this is really key here. 10-year, the TNX measures your 10-year treasury rates, interest rates. So you can see we're basically spiking up into about 4.07% on the 10-year. The more relevant thing is this trend line here. You had this downtrend starting back in October of 22, and you made a reaction high, and then you could probably, just mark it out right there, and clearly breaking out. All right, the market did see this as a trend line, because look at the impulsive action in the interest rates. So that means interest rates are spiking higher, and rising interest rates are, traditionally and most likely will remain bearish for tech stocks, especially bearish for the market in general, but especially bearish for growth stocks. So keep that in mind. We have rising interest rates that are starting to spike. Now we're at that former reaction right there. You're probably going to get a pullback here, okay? And maybe get a pullback and maybe get a little lift in the triple Qs. But ultimately that breakout is intact, and we should go on to break. The next breakout is above the former highs here. And you do that, you're setting up for the move all the way up here to those, kind of those former highs at 4.32. That's the high in this cycle. And if we break above that, believe there's going to be pressure on the tech stocks for sure, if you start taking out the former highs back there. So keep an eye on interest rates, very important. So as interest rates rise, gold is typically rising interest rates is bearish for gold as well. And you can see all the gold mining stocks pretty much down, trading all together. So all down today. I just don't see much here in gold that I want to buy. I'm not interested in going long on gold right now. Just the charts just don't look constructive enough, at least. Some of them are okay, but others not. And so we'll just wait for these to line up. I'm not really interested in going long on these. I don't want to short them either, but I definitely don't want to go long. And this is another key stock I'm really, focused on, just to give me a clue on, if we're going to start that next leg lower in the bear market. And that would be JP Morgan. JP Morgan still holding bullish trend. All right. So here's your low back in October. And you can see I've got all the marks, all the reactions of support circled. And we're still above that. So no sell signal, no indication yet, just keeping an eye on it. We are building some negative divergence on the PPO and the RSI here. So that could be an indication that we're going to break this trend soon. What I'm really mostly focused on is, if we actually break that trend. Okay, so, just keep an eye on that. If you see it break before I point it out, or maybe I'll be away or something, then, that's just another indication that financials for sure will likely be breaking down if that happens. JP Morgan is the king of the financials. And the home builders, they've been on pretty much a tear to the upside, but they are very interest rate sensitive. So again, everything's pivoting off of interest rates. It's very critical and key to this market in terms of inflation and what the Fed's going to do. And home builders here, you have a big bearish rising wedge. Nice big pattern on the XHB home builder ETF. They broke it to the upside. This to me looks like a stop clearing move. All right, you break back into the wedge, and it's very probable that you'll head to the bottom of the wedge. Okay, and then ultimately you would likely look for a break of the wedge. So the way you could trade it, obviously, is if you break back into the wedge, which it might even do that today, then, you short it down to the bottom of the wedge. You probably cover the short down at the bottom and then wait for the break to the downside to re-short the thing. And then ultimately that would signal a break of this big bearish rising wedge pattern. You take the measured target of the wedge here from the breakdown point. Let me kind of zoom over to see where that lines us up. And that puts us down around 56-ish. The 56-ish range is the measured target, somewhere right in there. Okay, so that is the home builders. And when I look at some of these, like DHI, you can see again, bearish rising wedge on this one. Broke to the upside, ran all the stops, and then gapped down and back down within the wedge. That's pretty bearish to see that. We haven't broken the bottom support area. The break of the bottom support would be a sell signal, all right? And that would signal that we are going to start to break down and change trends in this DHI. And again, negative divergence on the PPO. And slightly there on the RSI. Let me move my RSI down here. I like it better when it's down there. Okay, so that's that on the home build. Okay, the VIX. VXX is a VIX ETF. You can see here, pretty strong move today. This thing's up about 13%, starting to kind of break out a little bit. This one isn't the best for charting, but you can see maybe we have this downtrend right here, still within that pattern, hitting resistance right now. So again, the interest rates are running into resistance, so they're probably going to have a little bit of a pullback, we should get a reaction on this one to the downside, and then possibly start to break out as the triple Qs and the SPY start to go lower. But with interest rates being at resistance, they're probably going to ease off a little, and the market will find some footing today. Okay, so just going back to the triple Qs, I don't see too much today that's just screaming, for a trade. I definitely don't want to be going long. We're not at support on anything, but no real huge sell signals either on triple Qs. So the biggest thing is those interest rates. I'd be watching those to see what those do in the next coming days. I don't expect a whole lot to happen, the remainder of the week, but we'll see how next week. Again, this week being a holiday week, a lot of the institutional traders, the big money managers, they take the whole week off. So, next week when they come back, we'll see what happens. Besides that, I'll get the video out. You guys drop me a thumbs up on your way out, and I will catch you guys on Monday. Take care.